Hey everyone, this is June from Turning Point Life Investment, and this is your stock market analysis for the week ending in July 4th, 2009. So, as you know, we ended another calendar month. What I always like to do, if you're not familiar with my videos, is every time we end a calendar month, I always like to take a step back, look at the larger trend of the stock, meaning looking at it from a 10-year monthly view. So you notice what happened this month. We're looking at this candlestick right here. This is for July, which only has been trading for 2 days. Let me zoom in. So this is for the month of June. We had three consecutive uh, positive gains for the month of March, April, May, and then June created an indecisive, more or less a small body candlestick month. So that tells you there's a shift in momentum as far as the long-term downside or direction of the market. We're pretty close to this 20-month moving average. I still feel that there's a chance the market will tag it, but more likely we will probably pull back a bit before hitting this 20-month moving average. The reason why I say that is because every time a stock trends and it gets really stretched out from its moving average, it always has to come back and touch the 20 moving average somehow. So you can see how when it's trending up like this, it always comes back and tag the 20. And when it's trending down like this, especially when you get this huge separation right here, it does have to come back and tag the 20 just to equilibrate, neutralize itself from any extreme conditions. Okay, next going into a 3-year weekly view. I mentioned last week that we tagged this 50-week moving average, so that will remain as a pretty strong resistance level for this market. You can see how we are coming out of overbought on a weekly view, so that tells you that the market will take a little bit longer because we're working out a weekly overbought stochastic. So as whether it pulls back or consolidates, this will allow the stochastic to come out of overbought. Okay, going into a 6-month daily view. So I'm sure most of you, if you haven't seen it already from other people, the people are talking about the head and shoulder pattern that's forming, which is right here. Okay, so we have the potential left, and then there's the head, and then we're in the process of making the right shoulder. So all it is that it's telling us that it's no longer making higher highs and higher lows. Instead, the market might be actually making lower lows and lower high, which is by definition a downtrend. The only thing is we need to see if it breaks this neckline right here, which is somewhat of a diagonal lopsided neckline, give or take around 88, 89. So that would be a critical break of support. What most people like to do as far as projection of how deep the target is, you usually take the base of the neckline, take it up to the top of the head. We'll say around 88 as the base. So the top is around 96. That's about an $8 height of this head and shoulder, and you basically take it that same height and reverse it towards the downside, and that will give you a good target. So from let's just say 88 minus 8 points, that will bring us down towards about 80, give or take. So that would be a good projection to shoot for if this is a true head and shoulders, and if we do get a clear, nice break of this neckline. The other thing you want to watch out for is if we get a bounce off the neckline and we break 93, then this more or less voids the head and shoulder pattern. So especially if it breaks above 96, then that would definitely void the head and shoulder pattern. So that's always something to keep in the back of your mind, that you don't always want to overlook the other possibilities out there. Next, going into the VIX, we're going to take a look at the sentiment. So we did make a new low for the VIX. However, the market did not make a new high. So there's a little bit of divergence going on with the VIX. You can see we're up against this 20-day moving average. Next resistance for the VIX is around the 50-day moving average, which it hasn't been able to trade above since the beginning of March. So if the market continues to dive, or if it does break that head and shoulder, most likely the VIX will pick up and break above this 50-day moving average. So the main thing to be really looking for this week is just watch for the neckline. If it breaks, then you know we have a potential of more downside to come. Like I said, the projected target, long-term target, somewhere around 80, give or take. So just keep an eye on that neckline. And a lot of times what happens is if you do miss the breakout or breakdown, a lot of times it does come back and retest it. So that could be a possible entry, whether you want to buy puts or shorts. short the market, whatever it is. But sometimes, most of the time, it does like to retest the neckline.